up guys, how you guys doing today? In this video we're going to talk about how you can use Fibonacci retracement in an effective way to better your trade, or to make more money, to perfect your trading strategy, because we all know that Fibonacci retracement is actually like a strategy that you can benefit from. It doesn't happen in time, but for me personally, it's one of the things that I do use to perfect my trading. So without being said, let's go right into the chart and I will analyze, and I will show you some stuff and some tips on things that you can use. And for those of you who don't know what Fibonacci retracement is, Fibonacci retracement is used to determine when a trade should be rejecting, or where a trade we can get a new higher low or higher high or lower high. So it's just we try to dictate it from the previous higher low to higher high. That's if you're going to uptrend. Then if you're going to downtrend, we start from lower high to lower low. Then there are some key levels on Fibonacci retracement that we have to look at, like 0.318 and 0.51 and 0.61 or 62. That is the level that we tend to see, or these are the levels that are very, very important in the trading in trading when you are trading Fibonacci retracement strategy. So I'm just gonna go right now so that you guys can see and gain some knowledge. But before further ado, let's go right now. What's up guys? So we're just gonna jump into the screen right now and share, so that I can share with you what Fibonacci retracement is, and how to detect the levels on Fibonacci retracement. So with that being said, let's just go straight down to the screen right now, and we will see. Now let's go to trading view. Okay, good. On trading view, I'm just gonna put this right here. Then I'll put this one right here. Got it. Okay, good. So right now we can see. So before we start, I just want to go to a higher time frame, because that is how I get to see more data, or more realistic data from any pair I want to trade in. So let's say, for example, GBP USD right now, we're on 4 hours time frame. We can see that the previous higher high that we have before the market start consolidating in this area was this level here. This is where the market moved. Then it gave us this direction. Hold on guys. From here, the market moved to this area. Then we started consolidating area. So I would say the previous higher low was this one that we have. So we have to put our line over here, because that's where we're going to start from. So what you do in Fibonacci is that when you want to analyze a uptrend, like an uptrend market, you have to start from the bottom to the top. So you start from the higher low to the higher high. So if you're going downtrend, you have to start with lower high to lower low. So now we're starting with uptrend buy position right now. So let me delete all the drawing in the first place. Okay, so this is Fibonacci for you people who use trading view to analyze the market. So this is where you can find Fibonacci retracement. You can find it right here. It's written on it. When you just you can select other things too. So it's not just, you can trend base, Fibonacci extension, Fibonacci channel, Fibonacci time zone, all sort of stuff. But what we are looking out for today is Fibonacci retracement. So when I pull my trail, remember when we are in position or for a buy position, we have to start analyzing it or placing our Fibonacci from the higher low to higher high. So which is what we're doing right now. So we started from higher low to our previous higher high here. So this is number one. We can call this one higher high and higher low. So then if we move this area to this one, for me, I always like to look at the bigger picture of the market. So what do we have? We have the market consolidating from 0.60% Fibonacci level, which is, let me show you the strongest level on Fibonacci retracement. So let me just type in. Uh, 38%, 50%. Okay. So these are levels that are a key level where I personally look out for. And again, I don't just trade Fibonacci retracement strategy. I trade it by using Fibonacci and by using my other strategy to combine them together to give me a particular sense of what I'm looking in the market. So I don't trade based on the information or the data I get from Fibonacci, because sometimes, most of the time, Fibonacci will fail you. But when you add it, or when you're trying to implement it with your strategy and other confluence that you're looking for, it makes sense to you, to the reason why you have to place the trade you want to place. So yeah, so that's what I wanted to write. So I hope you guys can see it. Okay, so in another one, I want to draw um another one. So let's draw another one so that you can get more of what we are looking for. So we're gonna start from here, then to the high. So to the high, I know you say that it almost get to 31 or 38% level, which is in this area, and it did get there in the second time. So the second time it moved from there, and the trend continues. So let's do the same thing by just simply starting from the low to the high. From the low to the high is it's giving us very nice trade, or very nice signals to trade right here, because number one, we didn't just have Fibonacci, we also have something we call continuation of the trend, which we have a previous candle that is, when you look at this point, which candle do you see that is different? Which is this bullish candle, this green candle that is causing more like a small body and weak long weeks. So we have the market rejecting this area. And for your information, whenever pounds are trending, any currency that has to do with pounds, whenever they are trending, they don't come back to test like deep, like deep retracement. No, they can reject from 23%. They can reject from anywhere. So you just, but once you do your analysis, you know that with time, you get to understand that GBP, GPY, or GB, like pounds in general, like to retrace at this particular level whenever they're trending. So that's what you also look out for whenever you see a trend in the market. So let me take one example from this area. So we have this. Okay, good. Now see how this market is getting from two different zones. We have the number one is this 50%. Number two, the second one is 38%. All the whole. So with this, and with the help of this resistance level, you can place your buy and be rest assured that the market will still play in your favor, because you have so many things backing up your strategy, including with the Fibonacci retracement and with this resistance level. You know that your risk to win is way higher than your risk to lose. So let's do sell Fibonacci retracement. Let's do that. Okay. So let's look for a sell opportunities. Then we can. Okay, good. So number one thing I'm gonna look out for is this. So you guys can see. So we have the market rejecting like at exact 50%. So we have a weak candle, but guess what happened? The market closed at 0.5% level on Fibonacci. So you might not, for someone like you might not enter the trade immediately. For me, I might not enter the trade immediately depending on the time frame the market is happening. Then what I will be looking for is just a break around this structure, because this structure was printing higher high and higher low. Then once we break it, I just want to retest just like we did here. Then that's boom. Like the only thing I'll be looking out for is how to sell aggressively. So we have this also. Then the market is rejecting 0.3%. See, this is what I'm expecting. This is what I'm trying to explain. When the market is trending, they respect 0.3%. Same thing happened here if I drag this to this point. Same thing, 0.3%. If I drag it like this point, almost like 0.3%. So it's something that works, but you just have to find a way to implement into your trading strategy. Again, I will not advise you to depend on just like, okay, Fibonacci treatment. Yes, I know it does work. You can make a lot of money with it, but it has to be when the market are trending. So if the market is not trending, there's no way you can make a lot of money from it. So for me, I like to get into the trade before the market starts trending. So which can be risky because sometimes I do blow accounts, then eventually I'll get the move. But when I get the move, I let the move run for as long or as much as the market can give me. So I hope you understand this little explanation on how Fibonacci retracement works. If this is your first time on this channel, my name is Mosh. You can call me Smiley Mosh. You can call me Babaoja. I'm a trader from Lagos. I just want to say, if you are yet to subscribe, make sure that you subscribe and give this video a thumbs up. This video is just, when you do that, it encourages me to do more. Whether you do that or not, I'm going to still post videos because I'm enjoying posting it, right? But it's encouraging me more to see that this video is helping people to level up and to learn some things about trading.